Market sentiment supports the US dollar's rally. The markets are buying the greenback on the hawkish comments from Federal Reserve officials, signaling their intention to continue raising interest rates and fears of a default in the United States. Notably, there are growing amid inconclusive talks between the US President Joe Biden and Congressman Kevin McCarthy. At the same time, macroeconomic data points to the stability of the US economy, reinforcing expectations of further rate hikes. In the best-case scenario, the Fed may refrain from increasing the key rate. Meanwhile, no rate cuts will be made in the near future. What other significant events in the traders' calendar could influence trajectories of popular currency pairs? Let's discuss this on InstaForex TV channel. On a Thursday, important news will arrive from the first hours of the Asia-Pacific session. Markets are waiting for the news about the Australian labour market. In the country, the employment rate has been at a fairly high level, allowing the Reserve Bank of Australia to tighten monetary policy to curb inflation. Meanwhile, analysts who monitor the economic news from Australia suggest that the increase in the number of employed will slump by 2 times in April. Notably, analysts have always been cautious about forecasts for the Australian labour market. Usually, the actual data shows higher figures than the forecasts. If the growth is higher than expected again, investors are likely to buy the Australian dollar. On the contrary, if the indicator comes in line with the expected reading, the Aussie dollar pair is likely to decline. The US labour market may be showing signs of overheating. The US labour market may be showing signs of overheating. Although recent reports appear to be moderating, the labour market has softened in response to recent aggressive auctions by the Federal Reserve. The last reporting period saw the largest increase since October 2021. If this trend continues, the dollar should start to correct lower in the market. Bank of Japan officials say they are making progress in achieving the inflation target set at 2%. On a Friday, Japan's consumer price index will be released. According to forecast, inflation may decline to 2.5% from 3.2%. The Bank of Japan achieved this result by refraining from aggressive auctions and interest rate hikes. Its policy contributed not only to the slowdown in inflation, but also had a positive impact on the growth of the economy, wages, and the stock market in Japan. The long-awaited speech by the head of the Federal Reserve will close out the trading week. Many FOMC members have already commented on the current economic situation and plans to change the US regulator's monetary policy. Most of them continue to insist on rate hikes. However, economists predict that the Fed is likely to take a pause in the tightening cycle. Jerome Powell is supposed to dispel all doubts. Investors will assess his speech and define the medium-term trend for the US currency. So that's all for today. Make profits with the InstaForex, subscribe to our channel and follow news with us, and see you online tomorrow.